Hi everyone, welcome to the inaugural Wednesday seminar in our newly renovated Pi Room. So for those of you joining us online, it looks a little different, but hopefully it's the same high quality content that you've come to know and love from us, with better video and audio. So as they say, leave your comments down below if somehow it's not working out for you. I'm really delighted to welcome Sebastian Rosado, who's a professor of political science at the University of Notre Dame. He also is affiliated with numerous institutes there, the Kroc Institute for International Peace Studies, the Leo Institute for Asia and Asian Studies, and I'm not going to pronounce this correctly, the Nanovic Institute for European Studies. More importantly than all of his affiliations, though, are his books. He's the author of Europe United, Power Politics and the Making of the European Community, Intentions in Great Power Politics, Uncertainty and the Roots of Conflict, and How States Think the Rationality of Foreign Policy. He's also published widely in a truly impressive set of outlets, including the APSR, Comparative Political Studies, International Security, Perspective on Politics, Security Studies, and so forth. Today he's going to talk about new work on commerce and conflict, and we're really delighted to have you with us. So welcome to the Security Studies program.
Thanks very much.
Okay.
It's a pleasure to be here. I think it's 20 years. It is 20 years since the last time I spoke at this seminar. It was in the other building, which means that A, I'm old, and B, I probably only have one more of these seminars left in me.
How do you think we feel?
Regardless, I'd like to invite Taylor for inviting me, Andrew for organizing everything, and all of you for coming. I've been told I can speak for up to 45 minutes. I'm going to try and keep it under 40. I always tell people I don't like the sound of my own voice, but I kind of do. But I would try and keep it under 40. So for obvious reasons, and I think reasons that probably a lot of you share, I've become interested in the whole question of trade, tariffs, rare earths, chips, things I'd never really thought about until about 2 years ago, and all sorts of other economic issues. And the more I've thought about these things, the more I've focused on pretty basic questions, because I've realized that I don't have the expertise to be any more than basic. And the first question is, why do great powers engage in commerce with each other? Why do they do it? How can we explain why they trade, why they invest in each other, and what shape that commerce takes? And the second question is, what are the consequences of commercial relations for great power politics? My instinct whenever I start a new topic is to turn to structural realism. Some would say foolishly, but I think it's a powerful theory that explains how great power politics works, and I actually think that it's much more relevant to the economic realm than most people think. Clearly, it's more important in the security realm. The problem with doing that is that it causes a major problem, which is that no one thinks structural realism has the answers to these questions. There are lots of arguments out there about the causes and consequences of commerce, and there are lots of debates about which are the best, but there is no debate that structural realism is the worst. And a great example here is Dale Copeland's Economic Interdependence and War, which is arguably the most important book written on the subject of commerce and international politics in the past 25 years. And one of his major claims is that structural realism, which is what he calls the Waltz-Mearsheimer thesis. And when I talk about structural realism, I mean the Waltz-Mearsheimer thesis, or what Charlie Glazer, who's here, calls the standard structural realist view. We won't litigate if it's any good, but we'll just give it that name, structural realist view. He says it offers a woeful account of trade and investment, and war and peace. And he makes 3 points. First, structural realism cannot explain why states would engage in commerce with each other. In fact, he says, quote, realists say great powers have clear reasons not to trade with one another. This should make us automatically question their understanding of international political economy. Second, structural realism cannot explain why states that trade and invest in each other routinely remain at peace. After all, this theory says that high levels of commerce, quote, will only increase the chances of conflict and war as great powers scramble to reduce the vulnerability that dependence brings. Third, structural realism does a poor job explaining situations where commerce was an important driver of peace. This is classic Dale. Even where it's best, it's worst. If you look at his case summary, his theory, which he calls trade expectations theory, explains more or less 90% of the cases of conflict, whereas economic realism, by which he means structural realism, explains about 40%. So in essence, structural realism can't explain why states engage in commerce, and it can't explain the consequences of commerce once they get into it. What I want to do today is I want to challenge that view. And I want to suggest that structural realism offers a powerful theory of great power commerce. To that end, I'm going to divide my talk into 2 parts. In the theory section, I'm going to outline a structural realist theory of commerce that explains why states engage in it and what shape their commerce takes and what effect it has on the prospects of war and peace. That's a lot, but I promise you it's a pretty short theoretical section. And then in the evidence section, I'm going to show you some suggestive data that I think makes the theory quite plausible. I'm going to stick to the period from 1816 to 1914, which is the period that I know best. But my reading of the evidence actually is that the interwar period and the Cold War are less of a problem for structural realism than the period from 1816 to 1914. And I just want to stress it's going to be suggestive evidence because I don't have time for more than that. Let's talk about structural realism, or my version of it. It rests on 3 observations that you probably all know well about great powers and their environment. The first is that great powers have a paramount interest in security, which means they want to deter their rivals from using force against their homelands and against their vital interests. And they want to defeat those states if deterrence fails. Next observation is the international system's anarchic. There's no government above states to protect them from each other. And finally, the international system is an uncertain realm, which means that great powers can't access the kind of information that would allow them to reach confident conclusions about each other. And the 2 things that they can't be confident about are whether their rivals have offensive capabilities, that is, do they have the capacity to destroy or conquer them or their vital interests. And they can't be confident that their rivals have benign intentions, which is that they don't want to come after them or their vital interests in the first place. It's a well-known story, and there's a well-known conclusion, which is that under these circumstances, states pay careful attention to their military strength relative to that of their peers. Without an authority to protect them, uncertain about each other's offensive capabilities and military intentions, they conclude that they have to procure the means to defend themselves. But acquiring military strength creates a security dilemma when one state makes itself more secure by increasing its military might. Others are made less secure, And the upshot is that all states work to increase their military strength relative to other states. Put it slightly differently, they try to shift the distribution of power, distribution of military might, to be clear, in their favor to prevent it from shifting against them. This emphasis on the distribution of military might means that great powers pay careful attention to the distribution of wealth, because wealth is the primary building block of military strength. This point can't be emphasized enough because it runs all the way through my arguments. So let me just repeat. Great powers are highly attentive to the distribution of wealth, which is to say that they care greatly about how wealthy they are relative to their peers. In the final analysis, the greater their wealth advantage, the greater their potential military advantage. It doesn't translate perfectly, so I say greater their wealth advantage, the greater their potential military advantage over other states. And conversely, the greater their wealth disadvantage, the greater their potential military disadvantage. And I think there are three ways that states can generate greater wealth. One is conquest. The expansion of the United States in the first half of the 19th century and of Prussia from 1862 to 1871 are obvious examples. In each case, the state absorbed vast swaths of productive territory containing large populations, or in the US case, push populations in, greatly increasing their wealth in the process. Just a couple of facts here. Prussia controlled 4% of European wealth in 1850, 20% in 1880. It's just a massive change. Meanwhile, the United States became the wealthiest state in the world, overtaking Britain in 1870 at the latest. Some people would say earlier, but I'm British, so 1870. Another wealth-creating strategy is internal reform. Between 1871 and 1914, Germany put in a series of basically liberalizing policies that triggered two waves of industrial expansion. First one lasted about 20 years, and the second one went through to World War I. In the 20th century, Stalinist economic planning, beginning with the first five-year plan of 1928, greatly accelerated the Soviet Union's economic growth. Again, some data. The Soviet Union controlled 2% of European wealth in 1920, 14% in 1930, and 28% in 1940, almost entirely by internal means. It didn't do any commerce at all. But that leads me to the third wealth-generating policy, which is commerce, by which I mean trade and investment, and I'll talk a little bit more about that later. But this is also an important driver of increased wealth. Though I just want to be clear, it is by no means as significant as conquest or reform. Let me take each element of commerce, and let me start with open trade. The idea that open trade contributes to the wealth of all parties that participate in it goes back to Adam Smith's Wealth of Nations, though arguably only in Britain. Took a considerably longer for that idea to take hold on the European continent. A lot of protectionist thinkers in Germany, but by the middle of the century, it was agreed. And the basic argument is that trade generates economic gains through four processes: specialization and exchange, and that's the primary one. Technology transfer, increased returns to scale by creating larger markets, and lastly, competitive outside pressures that force the domestic economy to become more efficient. That's trade. At the same time, investment flows are also important sources of wealth. Capital inflows can promote economic growth by allowing the receiver to develop infrastructure or by transferring technology to it. The growth of the United States economy in the second half of the 19th century was hugely reliant on European investments. Britain was the largest investor in the world from about 1850 to 1900, actually 1850 to 1920. And more than a quarter of all its investments went to the United States and helped US growth tremendously. Similarly, Japan's entry into the great power ranks relied on significant investment, again from Britain. And then capital outflows. It's not only the something happened. Oh, okay. Capital outflows can also increase a state's wealth. So it's not only states that have investments coming in. The British Board of Trade estimated in 1914 that investment income from investments abroad was equal to 10% of British gross domestic product. So there are lots of ways in which commerce, again, trade and investment, can drive a state's economic growth. Okay, let me now find, this is where we are. Okay, so all of this is to say that great powers have an incentive to trade with each other and to invest in other states as a way to increase their wealth and therefore ultimately their security. The decisions about who to trade with and who to invest in depends mainly on questions of size. All else equal, there are good reasons to trade with larger states because they have more abundant resources and they have larger populations and therefore larger markets. So the larger your trading partner, the greater its potential contribution to your wealth. Of course, that's not always the case. There will always be cases where an essential resource, think gold or oil back in the day, is located in a small state, and it'll be important to establish a relationship with that state. But there's no question that great powers will often trade with and invest in other great powers precisely because those powers have a large geographic extent and because they have large populations. It would be foolish for them not to, because then they would not benefit from commerce. Now, having said that, there are important limits to how great powers will arrange those commercial relationships with other great powers. And there are two well-known factors here in the literature, relative gains and dependence, both of which are all about relative wealth, which is the all-important issue here. Let's start with relative gains. This is a situation where a state makes wealth gains from its commercial relations with another state, but its partner gains more wealth from the exchange than it does, and therefore the distribution of wealth shifts away from the first state and in favor of the partner. It stands to reason that states don't want to arrange their commercial relations in this kind of way, in a way that allows relative gains to accrue to other states, and certainly to other great powers. This is especially true if the partner is wealthy already, and it's especially true if that partner is a military rival. Less of a problem if it's the partner is poor and not a military rival. Turning to dependence, this is a situation where a state depends heavily on a commercial partner for markets, goods, capital, and profits, just to list some of the major ones. Great powers fear dependent relationships for essentially the same reasons as relative gains. The partner can sever commerce, and cause the first state to suffer a relative loss of wealth. So like relative gains, great powers do not shape their commercial relations in ways that make them heavily dependent on their partners. Again, these kinds of issues are of greater concern if you're dealing with a wealthy military rival, less of a concern if you're dealing with a poor non-rival. Final point about relative gains and dependence before I move on, which is important to note. They are inversely related. Typically, relative gains arise when one of the partners is wealthier than the other. The poorer state usually gains more from the relationship than the wealthier one. At the same time, the poorer state becomes more dependent on the wealthier state for goods, markets, capital, and profits than vice versa. So in an asymmetric relationship where one is poor and the other is wealthy, or poorer and wealthier, one partner will be less dependent but make relative losses. The other will be more dependent but enjoy relative gains. So a trade-off for both states. On the other hand, these issues don't arise in symmetric relationships because there are no relative gains and there's roughly equal dependence. So those are my arguments about why states would engage in commerce and what kind of shape we expect that commerce to take, or what kind of factors would have an impact on the shape of that commerce. Let's talk about the consequences of commerce. The first issue, I think, is does commerce cause peace? Which is a popular argument, especially among proponents of economic interdependence theory. My argument is that trade and investment is not a significant impediment to war. And the reason is calculations of relative wealth. I told you relative wealth would keep coming up. Here it is again. In essence, the effect of war on relative wealth is much greater than the effect of commerce on relative wealth. So commerce doesn't keep the peace. Most great power wars that I can think of, in this case, think the Franco-Prussian War or World War I, are started to transform the distribution of power. And wealth, of course, is a major component of power. To simplify, states start wars of opportunity. Think of the Franco-Prussian War. I think of the Franco-Prussian War as that kind of war, to shift the distribution of power dramatically in their favor. And they start preventive wars to forestall a dramatic shift in the balance of power against them. That's World War I. Compared to these major conflicts, commerce is just not a meaningful source of wealth. Prussia's wars up to 1871 more than doubled its wealth without increasing any other great power's wealth and actually reducing France's wealth. No amount of commercial exchange could do that, especially between two sides that are investing and trading with each other because they're both gaining. The same is true of, I'll argue later about World War I. There's nothing commercial that could have produced more wealth than domination of the European continent. I think it almost goes without saying. Anyway, so great powers, in my opinion, will ignore commercial considerations when deciding on war. Turn to conflict. Commerce is sometimes a cause of great power conflict. I actually went into this project thinking that it was often a cause of great power conflict, and that has not turned out to be the case. But fortunately, I think I can explain why. It's sometimes a cause of great power conflict. In particular, I think great powers will threaten or use military force against each other when they believe that this will allow them to expand or maintain their commercial relations, because this will either shift the distribution of wealth in their favor, or it'll prevent the distribution of wealth from shifting against them. There's a lot to unpack here, so let me start with strategies for expanding and maintaining commercial relations. The basic point here is that great powers can expand commerce in all sorts of ways. They can cut off commerce, they can maintain commerce also in all sorts of ways. But you want to think about it in terms of economic strategies, which are things like tariffs, embargoes, investment bans on in and outflows. Are we on the right page? Yeah. And you want to think about military strategies as things like severing trade routes, or taking control of commercial partners, establishing political control over commercial partners. Those are two different sets of strategies that can both either expand or maintain your commercial relations. The big question is, when do states use economic means and when do they use military means? When do they start crises and wars? As briefly as possible, if a great power concludes that expanding or maintaining commerce will have a significant effect on its relative wealth, and that it can expand or maintain commerce by military means, then it'll use military means. Otherwise, it'll stick to economic means. Let me start with the issue of relative wealth. If an expansion of commerce is expected to increase your wealth by, for example, creating a large market or providing access to significant goods or capital or investment opportunities, then a great power will want to expand its commerce, especially if it can do so and simultaneously deny those opportunities to another great power. And if it believes that being cut off is going to markedly decrease its relative wealth by depriving it of markets and goods and capital and profits, then it will want to try to maintain its access to commerce, especially if it's the only great power being cut off, or worse, if another great power is threatening to replace it in that commercial relationship. So great powers just think about what are the relative wealth effects of expansion and being cut off and trying to maintain what you've been cut off from. Then there's the choice of economic or military means, which depends on how successful force is expected to be, which as a shortcut is a function of the balance of military forces. If a state expects military force to be successful in expanding or maintaining commerce, then it's likely to use it. In fact, military means are unusually attractive because if they're successful, they give a great power substantial control, and more control is better than less control. But otherwise, it'll use economic means. When you put all of this together, relative wealth versus military and economic means, I think there are two implications that are testable. The first is about commerce between great powers. Basically, great powers will not start conflicts with other great powers to expand or maintain commercial relations with them. They will not go into a conflict with each other for commercial reasons. Given the way that they shape their commerce, which we talked about earlier, to avoid relative gains and dependence, being cut off doesn't actually have much of an effect on their relative wealth. It has some effect, to be sure, but it does not have a great effect. At the same time, attacking another great power's homeland is a highly risky enterprise. It's a very dangerous way to try and hold on to a commercial relationship. So I can't think of any cases logically, and I'll argue later empirically, why a great power would ever use military force against another great power's homeland to expand or maintain its commerce. Second implication is about commerce between great powers and third parties. So these are other states in the world, not other great powers. In these cases, I think crises and wars are considerably more likely. A great power that managed is to seize control of a third party and prevents another power from doing the same can shift the distribution of wealth in its favor. It can benefit from the commerce it creates and deny that commerce to another great power. Likewise, a great power that retains access to a third party when another one is trying to cut it off can prevent the distribution of power, of wealth, sorry, from moving against it. So relative wealth can really shift in these situations where we're talking about getting access to or being cut off from a third party. At the same time, threatening or using force is more likely to be successful because it involves fighting another great power on the periphery rather than on its homeland. Let's turn to the evidence. My conclusion from a review of the evidence from 1816 to 1914 will not surprise you. I believe the structural realism offers a powerful explanation, and I will go through each of the claims it makes in a second. But before that, some preliminaries. On this slide is my roster of great powers. I've coded them as military rivals based solely on geography, because I'm not a believer in intentions or anything else. Broadly speaking, great powers can compete. They can be in conflict, or they can be at peace. Competition I take to be the default state of great power politics. So I'm not interested in it here. Conflict refers to threats or use of force in the form of crises or wars. And I've listed the wars and crises from the period there. And peace is just the absence of crisis and war. Commerce refers to trade and investment. Trade is the buying and selling of goods. Investment is the provision of capital in return for profits. I'm going to focus on trade here just to convey the idea, but the same applies to investment. So various relationships are possible. Significant trade creates what I call dependence. So significant trade creates dependence. The seller depends on markets, the buyer depends on goods. If those transactions are negligible, then they create a connection, but they don't create dependence. So various relationships are possible. If neither state is dependent on the other, then they are independent, though they may still be connected. Dependence is a situation where one state depends on the other, but not vice versa. Great powers are symmetrically interdependent. Stay with me. Symmetrically interdependent when they depend on each other, but they're roughly equally dependent on each other. And they are asymmetrically interdependent when they depend on each other, but one is appreciably more dependent than the other. How do I measure trade dependence? I measure it as trade, by which I mean imports and exports, as a percentage of GDP. You could use trade with a partner as a percentage of total trade, but I think that measures or captures the importance of a trade relationship versus other trade relationships. I think the beauty of my measure is it captures how important the trading relationship is to the economy. Specifying a number, a percentage of GDP that counts as dependence is not easy. So I came at this in two ways. The first is I used Albert Hirschman's famous work on trade dependence, which is as good today as it was 80 years ago. And he has some thoughts about what dependence means in sort of in terms of numbers. And the second is a consensus among economic historians that the European great powers were interdependent before World War I, and they were not interdependent in the 1930s. Amazingly, both approaches yield a figure of 2% of GDP. So I was happy with that, but of course we can dispute it. So let's turn to cases. You remember that structural realism says that great powers will either remain independent of other great powers, but they do have strong reasons to engage in commerce. So if they do become dependent, they will ensure that they are symmetrically interdependent, so as not to incur relative losses or dependence. And I think there's actually plausible evidence for this claim. I'm going to tell you about 1905 to 1914, but I'm inordinately proud of my data collection efforts. I have data from 1790 until 1990 for every great power in the world with every trading partner. My quantitative friends are very impressed. But I'm just going to do 1905 to 1914. I paired every military rival with every military rival, which produced 19 pairs of great powers. In 6 of the cases, the great powers were independent, as you might expect. Austria and Russia, though they were connected, and Japan and Russia, which had virtually no interaction at all, 2 good examples. In 5 cases, they were symmetrically interdependent, including what I think we tend to think of as important examples. Britain and Germany were roughly equally dependent on each other. Germany and Russia, Britain and Russia. Then there are 6 cases of dependence, which obviously do not fit with the realist rubric. But I think these cases are pretty easily explicable. I'll just talk about the 2 Japanese cases in the interest of time. Japan was dependent on both Britain and the United States. The Britain figure is actually Britain plus India. But this is pretty easy to explain. Dependence was imposed on Japan while it was still a minor power, and it had not yet gained full commercial independence at this time in terms of policy. Not only that, dependence on the other 2 great sea powers in the world was the only way for Japan to engage in commerce with large economies that would therefore boost its own. On the flip side, Britain and the United States had no concerns about relative gains. Britain was 4 times larger than Japan in terms of the size of its economy, and the United States was 16 times larger. Turning to the consequences, structural realism, as you know, says that commerce is not an impediment or not a major impediment to great power war. And again, I think the evidence bears this out. Austria and Prussia and France and Prussia were interdependent at the start of the Austro-Prussian and Franco-Prussian wars. Prussia expected massive wealth gains from victory, and those dwarfed any wealth gains it was making from commerce with those 2 rivals. Most strikingly, this is the famous case that everybody always trots out, but Germany was interdependent with Britain, France, and Russia when it started World War I. Indeed, each pair of states was becoming more interdependent in the 5 to 10 years leading up to World War I. In this case, preventing Russia's rise and dominating the European continent was expected to have a far greater effect on Germany's relative wealth than all of its commercial relationships combined. It's not actually clear to me what economic interdependence theory or structural realism says about commerce and the likelihood of crises. But just in case, I've looked at the crises, and it's worth noting that interdependent great powers were frequently involved in crises with each other. The major combatants were independent in the War in Sight crisis, the Eastern crisis, the Penjab crisis, the Fashoda crisis, the Moroccan crisis, the Agadir crisis, and the Bosnian crisis. Commerce between great powers. Again, structural realism says that great powers will not threaten or use force to expand or maintain commercial relationships with each other. Conveniently, the period from 1816 to 1914 in Europe involves a period of liberalization, which was designed to expand trade, and then a period of protection where states cut each other off from trade. I'll start with the expansion, which is 1816 to 1879. Britain used economic means, repealed the Corn Laws famously in the Navigation Acts in the 40s. But as you'll see, that had virtually no effect by 1859. Right? Britain had greatly decreased its tariffs on manufactures and foodstuffs, but all the others remained protectionist. But the British kept going. They negotiated the Cobden-Chevalier Treaty with France. It contained a most favored nation clause, which caused massive tariff disarmament across Europe when France made treaties with Prussia, Italy, Austria, and Russia. And therefore, by 1870, by economic means, you had lower tariffs all the way across Europe. It's the second column of numbers. Germany was considered, by the way, a essentially free trade state at this time. Then there's the maintenance of trade. So from 79 to 1914 is a period where there's a swing towards protection, and suddenly great powers are cut off from each other. Germany was the first mover in 1879. Austria-Hungary and Italy followed. Russia appears to have tariffed like every 3 days throughout the 80s, and it culminated in the Mendeleev tariff of 1891. France opposed the Malines tariff in 1892. And that's when the free trade interlude is over. Don't forget, France effectively started it on the continent. France ends it. Over the next 2 decades, protection remained high. And for the first time ever, the British started debating fair versus free trade, though free trade won out unequivocally in 1906. So again, you can see the rise in tariffs all the way up to World War I. But there were no wars or crises in response. Instead, great powers responded with economic means. France increased its tariffs explicitly against Germany in retaliation for what it had done. Austria and Hungary fought a tariff war. Germany and Russia did the same twice in the 1890s and in 1904 to 1906. And Britain and France just decided to shift their trading emphasis to their empires. So they didn't even bother using economic means to try and fight the situation. They just shifted their trade. Very quickly, the investment story is basically the same. There are only actually three major investors in the world before 1914, and they are Britain, France, and Germany. And Britain is by far the biggest, and Germany is by far the smallest. And the United States, by the way, is not even close. Don't forget, the United States was getting a lot of investment from Europe. The basic story, Britain cut off Germany and Russia in 1870, though it restarted investment in Russia in about 1907. France cut all its investments to Germany and Austria after 1870 and invested only in Russia from 1890. Germany invested in Austria and Russia in the 1870s and 80s and then abruptly cut Russia off and never lent them another dime or mark. But none of these cutoffs caused any kind of resort to force. They didn't even cause diplomatic friction. And in fact, the more I look at this period, the more it strikes me that these cutoffs, investment cutoffs, are best understood as responses to political developments rather than the causes, rather than in any way causing political developments. Final slide, final point, commerce between great powers and third parties. So again, structural realism says that sometimes great powers will start a crisis or a war with another great power, if doing so is likely to shift the distribution of wealth in their favor or prevent it shifting against them, and if they have military superiority in the disputed area. Figuring out what crises and wars are quote unquote about commerce is a contested business, but I actually think this list is not that controversial. It's close to, though slightly more extensive than Dale Copeland's. The basic takeaway here is that in every single case, the expansion or maintenance of commerce was expected to have a major impact on a great power's relative wealth. And the great power had local military superiority. Just want to go back to point out how big the effect on wealth was. Don't forget, in previous slides, Britain and Russia did about 2-point-something% of their GDP with each other. Really high amounts of interdependence were Germany and Russia at 4 and 4.5%. These numbers, for the most part, dwarf those numbers, right? These are large shifts or potential shifts in the distribution of wealth. And in every case, the state that initiated the crisis or the war had local superiority. I'll leave it at that. Thank you very much for listening, and I look forward to your questions.
Thanks so much, Sebastian. So the floor is open. Please raise your hands high. Okay, Ken Oy, I see you first. You've got the first question, but everyone else hands high.
Thank you for giving me toss. I'm waiting here in the fourth row instead of business seats up front. And speak up. I have a couple of questions.
And a little louder, please.
You're loud. I have a couple of questions that interrelate. First question is that you're talking about wealth as being foundational for military advantage. You're using the word wealth, but not productivity, income, many other attributes of economic performance. Wealth is a stock, not a flow. It's net. And by that standard, Saudi Arabia would probably look more powerful than many other countries today. So do you mean wealth? Is that actually the definition that you want to stick with, and why? And then the other stuff we can dispense with, give people time to ask, but I just wanted to start with that one.
It's funny you should say that. I was thinking to myself on the way over, I haven't defined wealth. So thanks for noticing. At the moment in my head, it's a shorthand for how large is the economy. And because I think at any moment in time that you're going to end up in a conflict with another great power, the question is, or you get involved in an arms race, how big is the economy? How much can you churn out? So I should think about that. But I just want to talk about the stock issue and your point that Saudi Arabia has a lot of wealth. I'm not denying that. My only question was that do great powers care about their wealth? And do they care about their wealth relative to other great powers? Because those are their military competitors, and that's where the wealth differential is important to them. So the fact that Saudi Arabia is very wealthy is neither here nor there for their relative situation with other great powers. Now, would two great powers want access to Saudi Arabian oil as a third party? And would they try and cut another one off? Absolutely. And I think I went to 1914, but if you look at the Cold War, for example, certainly some of those early Iranian crises were about Middle East oil.
Wealth.
Mhm.
And also, okay, a couple quick observations.
Yeah, please.
One is that we're talking wealth and not productivity, income, or other things that would, in my view, maybe bear even more directly on military power. That's the one angle. But the other angle is that wealth is usually stocks of stuff, less liabilities. I mean, that's the standard definition.
Okay.
And wealth is also something which may be subject to appropriation. It may not be enduring. It may not last. And so you look at poor Iran during the assets freeze, for example. Its vulnerability, to use Cohen and Nye's term, is something which I think that we need to take account of in defining what it is that you're trying to get at as a foundation for military advantage.
I don't want to sort of stop there, but can I ask you a question, because you obviously, I mean, I know that you know more about this than I do. When you say productivity, how is that related to wealth?
It's not the same. That's actually the point.
But as you become more productive, you would increase your wealth?
If you take net income,
Uh-huh.
productivity is something that generates income. All of those things are, again, part of this rather complicated picture. Wealth is the stock at the end of the process,
Okay,
exclusive of or net of liabilities. And these other things may, in some ways, maybe be more relevant to military power, is what I'm asking.
thank you.
Great. Christine,
Great. Thank you for the talk.
I should say, please introduce yourself for two reasons. First, for the speaker's knowledge, and second, it actually helps redirect the microphones to the person asking the question. So,
Hi, I'm Christine. I am a PhD student in the political science department. Thank you for the talk. My question is, I want to clarify, is the argument about how great powers are never going to be that dependent or interdependent on each other? Or is it also that even in the event that they are dependent on trade with each other, it's never going to matter that much to conflict? So I don't know if the distinction is clear here.
Yeah, I mean, there are two separate questions in the piece. One is what are the causes of dependence and the shape of it, and then what are the consequences? And you've identified the fact that there are two questions, and I think you think that there's too many questions, and I think I agree with you. You could write two papers. Just one is, what are the determinants of great power commercial relations? And then what are the consequences? For now, I just want to write one piece, and I think both are important. And the reason I think both are important is that, as you can tell, because of the way I think Because of the way commerce is shaped, I think that between great powers, I think that has implications for how they behave. So I do think the two parts are connected. And so that's for now, I just want to keep them together. But you're right, there are two questions in there. And right now I haven't chosen which one to answer.
Pippin, did I see you in the back? I was just going to ask a very simple question. That, if you don't mind, what's your dependent variable? I didn't quite, in your own words, very simply, I didn't quite understand the outcome of interest you're trying to explain.
I have two dependent variables.
Maybe that's one. Okay. So
It's actually the same question. So the first dependent variable is the shape of commercial relations. And then the second part of the theory is, once we've established a shape of commercial relations, what are the consequences for conflict and peace between great powers?
Can you operationalize the second one? In particular, like what are you measuring and how are you operationalizing sort of your ultimate DB? I think I have a better sense of the intervening DB, right? The shape of commercial relations. But I think the transmission link to the ultimate dependent variable was less clear, and also sort of how you're measuring and operationalizing.
Well, the question is, does interdependence? It's not interdependence, because there's relations between great powers and between great powers and third parties. But do commercial relations cause, let's just say, war or peace? That's the question. But the problem I face is that there are two pathways that you can get to war or peace, right? One is based on the relationship between the two great powers, and the other is between the two great powers and a third party.
I guess I'm struggling with sort of the alternative explanations for sort of conflict and other outcomes or levels of conflict in this period, right? So just the overall story relative to those alternative explanations or variables, like the balance of power, right? I'm not sure how this story fits in the broader sort of story on war and peace in this era, right?
Well, I'm only interested in wars that are fought over commercial issues, right?
Okay. Maybe we'll pick this up in lunch. I'm just having a hard time separating that from the alternative explanations and sort of the other causes of conflict, even if they are over commercial issues, particularly in this period. Right? The traditional realist explanations for conflict, for example.
Oh, okay. Tell me if I'm catching up. I mean, I'm still behind, but I have come to think about great power wars as being of various different kinds. I don't believe the, let's say, standard structural realist story that when you have multipolarity for a series of reasons that we're not really sure about, you just get more wars. Those aren't arguments about the causes of war. So the way I've started thinking about wars is I think that there are wars to transform the balance of power, and those are opportunistic and preventive. And then I think there are wars over other issues, the primary one being commerce. That's it. You want one cause for all wars?
No, I don't. I really don't. All right, Barry, two finger.
This is just, this two finger is simply a suggestion, which is the next time you do the talk, you need a slide on your causal arrows because it took me a while to figure out that you had commerce where interdependence operating interest to you as both a dependent variable and as an independent variable. So even that took me a while to catch up. You kept saying, are you keeping up? And I was trying to keep up, but for some reason, maybe I had to.
You should have raised your hand.
It took me a while. It took me a while to kind of figure, oh, we're playing both games here. And the second is, what the military likes to write BLUF. Somewhere in here, you got a bottom line us on what the really big finding is. There's lots of other questions you're going to get about the mechanics of this thing. I'm not going to make any observations now, but I think what we've just learned in these last couple of questions, but I think is true, which is, in a way, I think you've given us a lot of your logic of discovery and less of the logic of exposition. And I think basically, you got to headline the relationships a bit.
Oh yeah, I mean, everybody has clearly figured out that this is logic of discovery. In fact, I don't know if you read the blurb for the original talk. It's completely different from what I presented today. So, but your question actually raises you raise a really interesting point. When I look at let's just take Dale Copeland's book, because it is a huge work.
That much is true.
It's very hard to figure out what his story is.
That
like
much is also
what his. And I think that it's just to go back to Vipin's issue. I am having trouble nailing down what it is that the empirical bottom line is. I think I didn't clearly lay them out well enough, but I think I have logics that get me to those various outcomes. But if you said to me, what is your view on commerce and war? I would say something really disappointing, like, I think sometimes it causes war between great powers over third parties, which is not good.
That was my fundamental sort of concern and or question, because that's sort of where I end up, and that is very unsatisfactory.
Thank you.
I mean, you know that.
Yeah.
Okay. Let's see. Back to my list. Caitlin.
Thanks very much. So I guess I sort of wanted to come back to where you began, which is you said you had gotten a lot more interested in issues of commerce and great power behavior in the last 2 years, which I can say me too. And I guess I'm trying to understand what your argument helps us understand about present day dynamics on this topic, because I have trouble in your framework kind of interpreting US economic behavior that actually does not seem likely to improve US wealth and actually seems counterproductive. And, it seems like the basic assumption that great powers try to increase their share of the distribution of wealth maybe is not the main driver of a lot of US economic decision making. And I'm thinking here about other drivers, like the use of economic policy to personally enrich the president and his family and kind of the ruling clique around him. And some of the things that Stacey Goddard and Abe Newman have written about that they've called neo-royalism, where, you deploy tariffs and then you immediately offer cutouts in the tariffs to the companies that donate to your political campaign or that curry favor with you. And you overthrow Maduro to get the oil, but the oil is not to improve US national wealth. It's to give sales contracts to oil companies that are affiliated with the president. And you see where I'm going with this here. How do I use the framework, or can I use the framework that you're using to think about this historically to understand what's going on in the present day? Or is there just a totally different set of these sort of neo-royalist forces that are really guiding statecraft in this area?
I think anyone who tells you they have an argument that explains what's going on is lying.
Well, Stacey and Abe say that they do. That's why I'm asking you, and it's a pretty good argument.
So my I'm going to answer the question elliptically, I think. If I don't answer it, tell me. I'll try again. I just found a lot of the discussion about tariff wars and how this would really worsen relations and could spill over into the military realm to be overly hysterical. I just didn't think, oh, I'm glad Ken's nodding.
We haven't had responses that we expected either, actually.
Yeah, and the more I looked at history, I saw that, you know, that there have been tariff wars, trade wars, and they don't have political effects. So part of it was a reaction to the hysteria. That's part of it. The whole interest in sort of third parties, that was obviously triggered by Greenland, Venezuela, though, as you said, for personal enrichment. Greenland, Venezuela, the chip issue, Taiwan. And I do, again, I do think that this argument ultimately, well, when it becomes an argument, will ultimately, it can tell us about US-China relations, and it can give us a fairly positive take, which is that this is not going to escalate to military, but that where the conflict could happen is over access to these third parties that contain materials and markets that both sides need. I guess those are the two conclusions I take away.
Dan Siebel, is this a genuine two finger? Yeah, it's my one finger and two finger. Again, dovetails nicely with Keel's. Hi, I'm Daniel. I'm a graduate student. So I guess thinking about that when I was listening to your presentation, thinking about your data from 1790 to 1990, I was wondering, you know, what does it mean for potential conflicts today? So if I'm trying to look around the world and identify potential hotspots based on sort of the theory you presented about great powers potentially fighting over third parties, where do you think this might be most applicable? Do you think that these pure commercial conflicts in the modern day are possible, or is this a historical artifact? Yeah, I'm just trying to figure out where I might be thinking about your theory today, understanding that's built on a large body of historical case study.
One of the things that worries me is it may be a historical artifact, because, so I didn't talk about post World War One. Let's forget about the interwar period because the economics of it are all, or the commerce of it is all a bit crazy. But you know, the Cold War, both sides were essentially self-sufficient. So you're not going to get conflict. There was a little bit of conflict over oil in the Middle East, though neither needed it. I think the conflict there was in order to make sure that the other did not acquire it. It was a defensive move. Then I think about China and the United States today. I mean, I thought about a complete severing of relations between China and the United States on trade. I don't know how that would happen, just complete severing. What effect would it have on the two economies? I don't think it would have that much of an effect. I think they'd redirect very quickly. I don't think they rely on each other that much anyway. They certainly don't rely on each other for things that matter. I mean, what's the United States' biggest import? Plastic toys. That was a rhetorical question. It's plastic toys. I think our greatest export was soybeans. And by the way, they've now redirected all their soybean imports to, I think, Brazil. Is that right?
That's right.
So it may be as great powers have become larger and larger, and therefore have huge internal markets and great resources, that they rely less on the world economy. And I'll just say one more thing there. One thing that I noted about the cases, they're still up. 1, 2, 3, 4, 5, 6 are all about Britain trying to maintain the short route to India, right? That's one state, 6 cases. Then there's the Japanese on the mainland, and then the other two are the French. Kind of unsurprising, right? I mean, Britain is a small island that relies dramatically on its empire. So, of course, it's involved in almost all the conflicts, right? France, towards the end of the 19th, early 20th century, became an imperial power where its empire actually paid. For most states, their empire didn't pay. And then, Russia and Japan, that sort of then goes into the interwar period because of Manchuria, etc. And Japan's also an island. And it occurred to me that, these two small, relatively small, non-continental powers seem to get into all the fights because they seem to develop these commercial relations that were literally over the sea, overseas, and mattered greatly. And we may no longer be in that world.
Awesome.
Hi, I'm Austin Long. I'm a senior fellow here. I'm struck, if I understood your framing correctly, there's a lot of unit level variable idiosyncrasy that's happening for something that's supposed to be structural realist. And I'll just highlight your second source of wealth is reform. Inherently, something about the state, sometimes it works, sometimes it doesn't. I mean, I believe what you're saying, it's true. I mean, I believed it since I read Dick Samuel's book, Rich Nation, Strong Army, which is basically the Japan story of this. It worked great for Japan, then that kind of fell apart. China worked with Deng Xiaoping, Soviet Union, successful reform in the case you talk about, failed reform with perestroika. So can you explain to me how we're to understand when reform might work or not?
Oh, I have no idea. I
It's
mean,
just
so
important and sometimes it happens.
yeah, but I mean, so just first to go to the structural point. I mean, one of the predictions, as you well know, of structural realism is internal balancing, right? And in fact, internal balancing, I believe, is privileged over external balancing. And reform of the economy, I think, fits right in there. So I don't think it's inconsistent with a structural argument.
Sometimes you can do it, and sometimes you can't. And
Yeah.
there's no way to know when you can or can't.
Sure.
Like internal balancing of great powers is about, we have lots of resources, we generate them. This is, I'm transforming internally to be better able to generate wealth and resources. It's a little bit different.
Well, I mean, internal balancing, you come up with military innovations, you imitate innovations. Sometimes they work, sometimes they fail. When I was doing internal reform, maybe reform's the wrong word, but when I was thinking about that, I was thinking directly about internal balancing as we understand it. Increasing the resources you devote to the military and making organizational, technological, administrative improvements, and copying ones that succeed. But if you're asking for an argument about why reform works and sometimes it doesn't, I have no idea.
Okay.
I think it's a fascinating question, but I don't know. I don't know why internal balancing works and fails. I don't know why sometimes you come up with a military innovation and it works or fails.
Dick,
Yeah, so thanks for the talk, and just to follow up on this conversation, and thank you, Austin, for the plug. You ruled out intention as mattering. And if you ruled it back in, would you be able to answer Austin's question? I mean, it wasn't until Caitlin's question that the word company, firm, came up in the conversation. So they seem to matter very little. Intention seemed to matter very little. It's a structural realism, fine. But you've bumped up against the limits of it, and it seems to me that you've already identified your way back in to do a better job of explaining the outcome, should you wish to do it. What prevents you from doing that?
A book I wrote about intentions. No, all joking aside. My argument is that uncertainty about intentions is what drives competition between great powers. I cannot then, and I believe, and then I wrote a book about rationality, which I think is about dealing with a fundamentally uncertain world. It'd be very difficult at this stage to reintroduce intentions. And I also, I mean, it would be contradictory, internally
Yeah,
contradictory.
that's fine. That means
I don't think an
you've gone
internal.
back and you've looked at your work and you said, you know, I didn't explain as much of the variance as I wish I had. And now I can, I think, if I tweaked it.
Well, I'm sure there are people here who don't think I explain much of the variance, and I would agree, but I explain enough for my satisfaction, and I would rather keep the argument spare and explain what I can rather than complicate it.
Again, but can we go back to this dog that didn't bark, which was the company, until Caitlin nipped at your heels on this one. That's where it seems to me that's where there's an enormous difference. You have an imperial. You're talking about an imperial period. The great powers that were fighting each other were all imperial powers. You get into and then when you were asked to bring it up to date by Dan, you went right to the post-Cold War almost. And it just seems to me that in the meantime, there was an entire international system that was built on multinational firms. There were all sorts of, their firms mattered in ways that you didn't identify, and I'm wondering if we should think about that. I mean, you might have a period in the beginning when the only thing that mattered were the imperial leaders, and they were governing all that firms did. But I don't think that was true of India. You know, East Indian operation by the Brits and so forth. But private firms, it seems to me, had more responsibility for commerce than you were willing to allow. And for government policy about commerce, for what states do.
Yeah. Well, let's set aside the East India Company because it's actually a very interesting case. But I got into a literature that I never thought I'd get into, which was about capital investment by great powers. It's actually great literature, like the 40s, 50s. What's this guy's name? Albert Weiss, is it? Anyway, they repeatedly make the argument that the big banks, who are ultimately responsible for floating loans, were all run by the government, explicitly in France, explicitly in Germany, not explicitly in Britain, but there was so much crossover between policymakers and bankers. I used to work for Goldman Sachs, so I sort of got used to this, that, you know, they're all in the same, they all go to the same clubs. And I think the British government ran British investment through the big banks, Rothschilds, Barings, etc. So I don't think firms had, maybe any latitude is a little bit strong, but I think they had hardly any latitude at the time. The East India Company is interesting because, you know, the whole question is, was the British government involved in a kind of wink-wink situation where it was like, you go do what you do, push it as far as you can, and when you get into trouble, we'll come and bail you out? Or was it the East India Company driving the train, and then they would come and bail them out? And I've started to think that the government was in the lead there as well, but that's just my reading.
Well, we'll bracket it here
Okay,
for now.
bracket it, but I've got a million questions.
Thank you. 5 minutes left, so I've not done a good job of allowing everyone to ask their questions. So here's my plan. Carly and Maria, you are going to lunch, so you will get your questions at lunch, not for the tape, however. So I've got 4 folks left. I'm going to invite each of you to ask one short, sharp question. And Sebastian, then I'll go through all 4, turn it back to you, and you can respond to all, some, or none of kind of the questions that are offered to you. So in order as I got you on my list, John Caverly, Phil Budden, Diana, you, and Mariana Buttigieg. So John, over to you, and then to Phil, Diana, and Mariana.
Hi, John.
John Caverly, Naval War College. So plenty of realism in the talk, but I didn't see the structural part. And so, you know, if I think about structural realism, right, the variation in great power politics depends on the number of great powers and the distribution of power among them, but you don't have that in this. It's just bilateral relationships. So that's pretty radical.
What do you think? That's the question.
Phil. Fellow Brit, so definitely 1870 at the earliest. As a former diplomat, I love some realism, rational state actors, unitary governments, wish they existed. I'm now at the management school, so I was going to ask the company question. I think there's a dialectic there. Because everybody meets at the same clubs, the state is not a unitary actor that can think independently of the other powers. And so the Chinese would love that debate about is it the company or the state. The question is, bringing it up to date, hypothetically, of course, what if one great power, ailing superpower, starts pissing off starts annoying all third parties in the middle and driving them towards the rising thing? Is that a rational position that, you know, realism would inform such a government to annoy all those third parties or middle powers?
Diana.
America.
Great. Hi, I'm Diana. I'm a PhD candidate in the department. I have a question. I'm really intrigued by your concept of symmetric, asymmetric independence that you mentioned, and wanted to hear if you can elaborate a little bit more about how that influences how commerce is shaped, or how commerce shapes conflict. Specifically, are you sort of suggesting that can great powers choose whether they enter into an asymmetric or symmetrically dependent, interdependent commercial relationship? Why not? Does that matter?
Mariana.
So my question was about the units of analysis that somewhat was broached here, starting with Caitlin. Whether great powers, in talking about commerce, are sort of a sufficient kind of explanatory unit of analysis when you talk about commerce. And the British East India Company would be a great test for that. There's great historiography that came out recently, David Dalrymple's The Anarchy, and from what I understand, it was exactly the opposite of what you assume. It was a private joint stock company that basically ran amok at the subcontinent, had a private military, forged alliances, fought wars, and had pretty much 2/3 of British MPs in their pocket, either as shareholders or simply paid off. And the state, with great effort, the Crown established some measure of accountability over the company in the mid-1800s and ushering the era of the Raj. So there's a lot of historical evidence you can draw on, and I think, I'm afraid, it might not support your assumption that the state has had such a purview over commercial policy in the same way that it would over foreign and defense policy.
Great, thanks all 4 of you. So back to you.
Thank you very much on the East India Company. If I could ask you, is it also true of China in the 30s?
That I don't know. But
Okay.
for me, it seems that if the world were inhabited with units like the Soviet Union, that your theory basically would account for that, but not in the world of commercial enterprise.
Okay. On symmetric versus asymmetric, I think that great powers would always prefer a symmetric relationship or no relationship at all with other great powers because of relative gains and dependence concerns. On driving third parties away, I've heard there's a new argument out there called neo-royalism. which probably explains it. And then John Cavalier, I hate to do this to you. I don't think polarity is all it's cracked up to be. I think a structural realist theory says that the structure of the system shapes state behavior, and I think Charlie would agree with me. I don't see where polarity plays in. I think polarity is I think polarity was introduced as an easy way to avoid having to actually explain the causes of war. And it was just done because you could just say war is more or less likely.
It's the distribution that's the one that is probably the one you have to deal with more.
And on that note, please join me in thanking Sebastian for a wonderful talk.
Thank you very much.